I wanted to talk about a couple things here on the charts. We're going to be taking a look at gold. We'll look at the dollar. We'll look at the VIX, which is up 10% just about here today. It's an active morning. We're going to talk about everything that is going on. The S&P and NASDAQ, as I mentioned, are dropping on the day. The dollar index is up. You've got gold down on the day by 0.66%. Oil, trade that I took yesterday, not going too hot, but we're staying in the game. I might get stopped out here. If price keeps going higher, I'll take a loss on oil, which would be fine. But ideally, let's see if we can get some rejection in this area. But if we don't, again, I've got to stop out above the high of the day here. So I'll be watching oil today. I'll be watching gold, which I am also long on, just about break even on my gold trade at this time. We'll see if that one wants to continue to play out. If it doesn't, if we break through the lows, I will stop out of my position. Let's talk about some other losers that I'm stuck in. TLT, come on TLT. We were really hoping that you could make the move. TLT looked like it was gonna finally break out here. You know, moving averages were starting to move into positive territory. This downward trend seemed like we had finally cracked with this jump in TLT off of the recent jobs data, CPI cooler than, or coming out cool. I was really thinking that we would get some TLT upside finally. Now, what is TLT? If you don't know, it is a 20-year plus treasury bond ETF. So essentially, long duration bonds in the form of one single ticker, TLT. So I'm long on TLT, which is, again, proving to be a stubborn trade for me. I am red on this trade. I think last time I checked, the P&L is like down $2,300, which is no fun. But yeah, a little SpongeBob sad. But we're holding on to it. I think that it still has potential. I still think that rate cuts could come in. And I'm not really fully convinced that this is just the start of another huge leg lower. To me, it just looks like, for now, we are continuing to go sideways, consolidate as we have done for, several months here. But TLT, a loser for me, a trade that I am dealing with that continues to not play out the way that I had hoped for. But, you have winners, you have losers. Speaking of winners, kind of, I'm still in my S&P 500 trade, but I feel like I dropped the ball on this one this week because I talked a big game about selling covered calls when we were spiking up, and I didn't do it. I didn't move fast enough. And then I thought that I had, maybe another chance to sell covered calls against my position. I've mentioned that I do think that the indices have room to pull back. And I think that, and I got to stay true to this market is a buyer's market, I think. People are coming in here, they're stepping in, and they're buying the dips hard. So I'm very curious to see, as you get this dip today, is that going to, from a price action standpoint, is it going to last? Are we going to come down, test that 20-period moving average on the daily chart and bounce and continue the rally, continue the party? I tell you, it's a lot more fun when stocks are going up. But if we break this level of support, I think you're in for potentially a little bit more consolidation, or not even consolidation, pullback, right? So my question here, I guess, that I'm looking at today for the S&P 500 specifically is, you're coming into a level of support. How does price respond to this level of support? Now, I've said recently that my current entry exit bias on the indices is neutral. Okay, I don't have a bullish bias. Well, I don't have a bearish bias either. I'm just kind of neutral. I actually have a trade on VOO, which I've talked about a lot, but I'm not logged into my brokerage. I am long VOO in this general area. I sold puts, I got assigned, I'm in the trade, and I've been holding on to this one. So I would like this thing to continue to go higher. Don't get me wrong, that would be great for my P&L. But I do also think and acknowledge that if we break through this level, we very well may be headed back down to 51.25 on the S&P 500. I've been calling that for a while. We're not calling that I think we're going there, because I don't necessarily think we're going there. I'm just saying that if we break this level, like if you get a solid red candle here today, I will say clearly, I think likely we are going there. So that would be my positioning on this. The S&P 500 has had a really strong run. If you look over the last 1 year period, it's had a remarkably strong run. It is very appropriate, in my opinion, that we do see some pullback, that we do see some consolidation, some breaks. We had a V-shaped recovery here off of this move. And so I think that you may see, again, some consolidation in the meantime. And if we break and close underneath this level of support, that would be my cue to say, I think in the short term, we go lower on the S&P 500.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Hopefully that makes sense. Just wanted to give you my thoughts on that because I've been talking a lot about indices recently. I do have positions on the indices. XLK is something I actually would love if XLK continues lower for the next few days. In fact, I'm going to have to, I'm talking about so many positions. I got to pull up the brokerage and log in. Hold on. Okay. So let's pull this up. So XLK, here is positioning for me. XLK, I'm up a lot on this position overall. However, the options market is actually going to open up in, well, about 20 seconds here or so. And this position, this call that I've sold expires in 3 days at 215. Now, all that means is that if the price of XLK is above 215, on expiration, you can see the options market's going to start updating in just a moment. Market just came up. Sorry, I lost my train of thought. If XLK is below 215, then I keep my shares and I make a profit overall. I'll make 47 cents times 1,000. That's $470 of profit. If the market stays under 215 on XLK, and I get to keep my shares. I would actually like that. I like the technology space overall, and I'm willing to hold through some volatility. So I'm curious to see how things play out in the next few days for XLK. Again, XLK is a technology ETF, a technology-centric ETF. Things like Microsoft and NVIDIA and Spotify, software companies that I love for the longer term. And I actually sold puts to get into XLK. I got assigned XLK. I'm now in XLK and I've been selling covered calls. And if you're not an options person, then no problem. But basically, I was bullish on this thing, but waited for a extension to the downside. Got filled on my shares at 198.90. So 198.90 is down here. So 198.90, I got assigned or bought the shares essentially right around here. So I'm sitting in a nice profit on this. And, if you don't trade ETFs, you can kind of think of this as similar to the NASDAQ. It typically moves with a high correlation to the NASDAQ overall, but it's specifically tech centric. So my point with telling you all this is that this is kind of a core positioning for me. It's a big size in my account right now. It is the biggest position for me, XLK, I believe. XLK. Yep. XLK and VOO is the second biggest. I was long or I bullish on the indices from a counter trend perspective in the month of April and got assigned on both puts that I sold. So we're going to continue to watching this. I am just barely green on my gold position, which kind of disappointing. Gold came all the way back, but I'll reiterate my thoughts on gold here. Okay. Here's the daily chart. Gold, completely, I have no reason to change anything about my positioning unless we break structure to the low. So if we break out and we hit my stop, I'm out of the trade, no questions asked, and only just 20 minutes of crying. That's all. Okay. Nothing more, just a light 20 minutes of crying, and we'll call it a day. Again, gold for me, break even right now. And my standpoint on this is if we break the lows, I'm out of the trade. And if we continue to push higher, especially if we can break like this 2380 level, then I'd like to go ahead and trail a stop and get into profit. So we will see how that wants to play out. I also have a short on oil. which I was a bit early to the trade, but I still like it. Resistance right around this area. To be honest, my resistance zone, I'm going to, with hindsight, draw it a little bit cleaner now. So we came up into the upper limits of this area, tested just above the highs, but I'd be curious to see how we close today. If we close green, not looking good for my trade. But if we close red, I'm happy to continue holding the trade. I have a short on a gold, a long on oil, and you might be saying, well, Nick, those two things just move together. But no, they don't, because you know what? I'm a smart guy. Not always, but sometimes, every once in a while, you catch me with my two brain cells making a smart checkup before I take a trade. Check this out. We just compared oil and its correlation to gold, and you can actually see that they are not that correlated. There are periods of time in which the correlation coefficient between gold and oil is high, but there is no consistent correlation between gold and oil. I thought that was worth mentioning because I saw somebody comment that how can you be long gold and long gold and short oil at the same time when they're correlated? And the answer is they're not correlated. There might be windows of time in which you feel like they are more correlated, and even maybe it shows up in the data. But to me, it's like, okay, if you don't have a consistent correlation overall, you don't actually have correlation. They might just be trending the same direction at the same time. Hopefully that makes sense. But yes, I am short gold. Short oil. I am long gold. And we'll watch to see how that plays out today. It's not a day trade. Please understand, I don't really day trade. I am a swing trader. So these are positions that I could hold for a while. And I think it's actually good to talk about on stream, is when we're dealing with trades that are not going our way. I think that is probably very relatable to audience members who also just, need to hear that no matter how long you do this, it's still easy to make mistakes and slip up. So I certainly have had my fair share. So anyways, let's be constructive about it, Ivan. Let's look at the dollar index. What are we looking at here? What are your thoughts?
Okay. Despite my anger and despite what is happening, it has come down to, after the fact, it is not by any chance, but it has come down to some kind of support. I wanted that support to hold, and then it seems to be that one to be holding. Okay, right. So plan B is in action. To me, I think this one has a great deal of run, at least until Thursday. What is that, tomorrow, probably? So, yeah. Then we have GDP tomorrow, and then PC on Thursday. That's gonna... Well, I don't know about that future, but that could potentially drive this one higher and lower for that matter. So, if this one gives a nice pullback today, like in the evening, I'll probably buy it again.
Yeah, I think that's the thing, is when we look at this week's news calendar. I was just pulling that up because you mentioned that. I wanted to, like I said, I'm going to be out, but we will still be covering. We still will find a way. The stream team is pretty resilient. We're going to find a way to be publishing for these events. We've got GDP. This is the one that I'm most interested in personally this week, is actually the GDP numbers, because last time around, Ivan, we saw in the GDP growth section, I think one of the things that kind of low-key kicked off some of the bearishness that we've recently seen in the dollar was the advanced GDP number that came in significantly lower than expected. I mean, look at all of the recent GDP numbers. When you see blues, that means that it beat the expectation. When you see reds, it missed. The last miss on advanced GDP numbers is like the only one that was just a substantially disappointing GDP number. So we get on Thursday, we get the follow-up. That's why I think it's so interesting tomorrow what comes out with the preliminary GDP, more so than usual, because last time we missed so much. Was that a fluke? Was that, now that we're going to get the revisions here, what is the GDP looking like? Because I think if you want to see USD continue to strengthen and continue to do well against its peers, we have to go to Jerome Powell on this. Jerome Powell mentioned that he thinks other central banks will cut rates because of the outsized outperformance of the United States. That outperformance he's talking about is GDP, right? It's talking about productivity, PMIs, GDP growth, earnings. If we are going to see dollar strength, I think a lot of it stems from, do we continue to see beats on the GDP numbers? So tomorrow we are forecasting now for 1.2%, which is actually really low. Even last time was 1.6. So I'm curious to see if we smash those expectations or not. So I don't know. What do you agree? Do you think GDP numbers are pretty key this week? I mean, also PCE, but what are your thoughts?
I find them equal. Okay, slight to PCE though, because Fed likes that more as inflation number. But just have a little bit of ice cold. It is a prelim. Preliminary means like it's just I think it covers like 80 or 90% of the actual. So it's not the entirety of GDP, but
right.
it's good enough for us, I guess, at this point. So if it comes in what it says 1.3, 1.2, that's a landslide. That is definitely going to lead to dollar bearishness, because if it comes in on target, because that is such a drop from the previous quarters that what dollar Ivan said was going to go higher is out the window.
Yep. That's more than fair. I think that, the GDP story is important to dollar outperformance. And, another thing that's worth mentioning here, at least in favor of the dollar bullishness today, is yields. Yields are up today, and I actually don't really know why. Do you know why yields are up 1% for the 10-year, 20 years up 1.2%? I mean, these are the same things that are, hurting my TLT long position, but I'm curious what your thoughts are on why yields are up today.
I haven't seen any that would make that one.
Yeah.
But the reason why yields would be higher would be, slight little tactical thing here, repricing of what they have previously priced in at 1.3 and say, okay, that is a bit too harsh. Because yields lately has, as far as I remember, off the top of my head, has been falling.
Yep.
Okay, that was, a week ago. Other than that, well, you have the PMIs that is higher than expected. You have strong PMIs. So inflation coming in down the line that they're pricing in now. That's my guess.
That's a good guess. And I also found one other thing that we were both missing here, which was that the spike happened following disappointing bond auctions yesterday. And also, I don't know if you saw that the Fed Reserve President Neil Kashkari also mentioned that in order to see rate cuts, the Fed will likely need to see multiple months of better than expected inflation data, which is contrary to the kind of softer tone that Jerome Powell has spoken. But I've made this, everybody focuses heavily on Powell, which of course they should. He's the chairman. But he's not the only one who makes decisions. He's not the only one who contributes thoughts to what's going to happen next. Kashkari has been one of the more hawkish Federal Reserve members, but it is worth noting when there's a lot of hawks or there's a lot of doves. And so when Kashkari steps forward and he says, rate cuts aren't happening until we see, inflation meaningfully start trending lower. He basically is pointing out, like, we need to see a trend lower before we see rate cuts, which, starts to question, Ivan. I mean, we don't have that many more months to play around and watch data come in if we're going to see the dot plot that was proposed by the Fed of 3 rate cuts. I think that's out the window, but maybe 2 or 1. Like, if you're going to get that, you need to see inflation like basically perfectly line up the next few months in order to get rate cuts in time. And so Kashkari and some of the more hawkish Fed members seem to be pushing back on the idea that rate cuts are coming until we get confirmation from inflation, which is, again, a stronger tone than Jerome Powell says. That would be also my guess. To your point, also PMI data has been, a little better than expected. We saw house sales or house prices, I think, surge yesterday or something like that. There was something that was also moving of the dollar on the housing market yesterday. So it's an interesting time. And also the market's telling us a story. It's all about rates today because look, the Russell down the most out of the indices. That is usually a telltale sign. Same thing with the Dow. These are rate sensitive companies. So yeah, we're seeing a picture for rates.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.